Hello, ladies and gentlemen. Happy Friday to you all. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, as always, I'm very excited to welcome us all to yet another promising edition of the Forex Morning Mastery, your daily dose of financial insight and trading strategies. Today happens to be the final trading day of the week, as everyone in the market will be preparing to round off their trading activities ahead of the weekend. And of course, last trading days like this usually has its own psychological peculiarity, as major key players in the market who are taking advantage of a particular direction may likely want to be doing some profit taking activities ahead of the weekend. And this usually reflects on the chart in the form of price action reversing from the prior leading price action, which may result into reversal setups on the charts today. So we are going to be taking this into consideration while we review the current market structure. And of course, the recent development as regards to the geopolitical tensions in the Middle East. This morning, I just woke up to the news that we had the Israeli strike the territory of the Iranians over the night, which obviously has sent a signal or a ripple across the market as regards to heightened concerns as further escalation might likely be the case as we head into the weekend. And of course, we have seen some significant reaction as a result of this development, which we are going to be looking at, and of course taking into consideration the fact that market participants may want to be staying clear of the market, especially ahead of the weekend during an era such as these geopolitical tensions. Then so far this week, we've not really done very well across the assets on our watch list, unlike the previous weeks, be it due to a lot of factors behind the scenes, from the geopolitical tensions in the Middle East to the uncertainty surrounding the interest rate decision from the Federal Reserve and a couple of other factors. Now, on the asset we have been monitoring so far this week, which includes the USOILSPOT, the GBPUSD and the XAUUSD. The GBPUSD appears to be one of the assets that have not really done very well for us this week, as every buy position we took advantage of keeps going back into entry point, closing in at break even or at stop losses, whichever the case it may be. So we had a couple of losses on the GBP and also we had same on the USOILSPOT before we, thank goodness, able to capitalize on that bearish momentum that came in yesterday. And on the XAUUSD, the week started for us on a rosy start, but since Wednesday, the market has been a little bit choppy, which further emphasized the prevailing uncertainty in the market. So we are going to be looking at all of this today. And in fact, in preparation for this session, I have done a comprehensive analysis on all of these assets and was able to identify simple trading setups that we will be using to guide our trading decisions for today. So I encourage you all to stay patient, exercise patience, and ensure that you stay tuned in so that you do not miss out on any of the ideas we will be deliberating on today. And before we go into the details, I would like to appreciate newcomers in the house who are just joining us for the first time. You are highly welcome on board. I'm very excited to have you around with us this morning. And you might be wondering, what is the Forex Morning Mastery all about? What is it that we really do here in this session? Well, the Forex Morning Mastery was born out of a necessity to do real-time follow-ups on the assets we are monitoring for the week. Now, during the course of the weekend, I usually share a couple of videos which details what my plans are ahead of the new week. And during the Forex Morning Mastery, we come here 3 times in a week to monitor, review the current market structure while we use the historical data we find on the chart to position ourselves for everyday session. So we usually do this on Mondays, Wednesdays, and Fridays. And in fact, I trust me, the more time you spend with us in this community, the better you get to understand our analytical approach, which eventually will help you in making independent trading decisions on your own. So I encourage us all to stay tuned in, and of course I welcome you once again and implore you to engage in the comment section below. I see your comment from Simon Bayoni. Good morning to you, Simon. It's been a long time since I heard from you. Trust you're doing very well. I also see you there, C40. Good morning to you, and glad to have you around with us this morning. So I hope you're having a good week as regards to our trading activity, though this week hasn't been very rosy at all. But I'm of the opinion that today we may likely be seeing some charts. So let's take another final leap to see if we can capitalize on trading opportunities, and of course take advantage of the rounding off of trading activities by major key players in the market, which obviously brings volatility into the market. So with that being said, here we shall be diving right into the business, and as usual, the first thing we normally do every morning is to keep tabs with the fundamental factors that is likely going to be influencing the sentiment in the market today. And of course, one of the reasons why we look at the economic calendar is for us to pinpoint and identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing, most importantly, to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the asset we have been monitoring since the beginning of the week, we have been focusing on economic features from both the United States and the United Kingdom economy. And so far this week, we've had interesting events, from the retail sales data from the United Kingdom to the high-low unemployment rate from the United Kingdom. We also had housing starts, building permits, and we also had some bunch of speeches from both the United States and the United Kingdom monetary policy officials from both the Bank of England and the Federal Reserve as well. And from what we were able to come up with from the speeches we had during the course of the week, especially from the United States, is the fact that inflation is still very sticky, and that the Federal Reserve still has a long way in curtailing the inflationary pressure in the United States. And what this simply means is that it has affected the plans of cutting interest rates, which has been one of the slogan of the Federal Reserve since the later part of last year, looking at 3 interest rate cuts for this year. But with the resilient US economy and higher CPI and inflationary data, this is not likely going to be possible anytime soon. So as a result of this, market participants are leaning towards an higher interest rate for an extended period of time, which technically should be affecting the US dollar positively as a result of its effect on the US Treasury bond yield. And in the recent times, we have seen how the US Treasury bond yield has been rising, which we all know in this community that the US Treasury bond yield is directly proportional in value to the United States dollar. So if the US Treasury bond yield is doing very well, we expect the US dollar to do very well as well. And of course, we've seen some traction in favor of the US dollar across board, but we've not really seen that effect on the GBPUSD and the XAUUSD. So today we are going to be taking all of this into consideration while we review the current market structure. So today, for today's event, Friday, April 19th, we have only one high impactful event from the United Kingdom, which has already happened earlier today. About 2 to 2.5 hours ago, we witnessed the retail sales data from the United Kingdom economy, and we saw that the data came in showing that the retail sector has been stagnant, as we saw figure coming in at 0%, which emphasized the provides insights into the health of the economy and consumer confidence in the economy. Now, the previous month came in at 0.1%, and market expectations was projecting a 0.3%. And of course, this data here is a disappointment. Now, we want to see how the market, especially on the GBPUSD, will be reacting to this event. For me, the path of least resistance for the pound sterling at this point is looking very, very bearish, and in fact we have a level that we have identified on that chart that we will be using to guide our decisions for today. So stay tuned in so that you do not miss out on that one. Then later on today, we are going to be looking at a couple of speeches from officials from both the Bank of England and the Federal Reserve, which is coming up much more later in the day. I think in about 4, 5, 6 hours from now, we are going to be hearing from Ramsden and of course Goolsbee from the Federal Reserve. And for those who do not know, these speeches hold considerable influence over financial market, as their remarks will provide insight into their bank's monetary policy stance, economic outlook, and potential future policy action. And of course, the anticipation of the speeches can significantly impact the sentiment in the market, as investors and traders will closely analyze their rhetorics for clues about future policy direction. So as we all know here, the anticipation of this event usually has a way of influencing the sentiment in the market, which obviously will reflect on the chart as price action. So with that being said here, we shall be diving right into the market dynamics, looking out for patterns and structures that we are going to be using to guide our trading decisions for today. So as usual, the first asset we are going to be taking on this morning is going to be the USOILSPOT. Now, on the USOILSPOT, the week did not start very well for us. Remember, at the beginning of the week, we were buying these assets, and unfortunately for us, we got taken out in a stop loss on the USOILSPOT during the midweek. But thank goodness we were able to capitalize on the bearish momentum that started on Wednesday's trading session, which finally gave us the privilege to recoup the loss we incurred at the beginning of the week, and of course made some more profit on top of it. Now let's quickly run through what really happened on this asset at the beginning of the week that led us to make the decisions we made. So at the beginning of the week, if you remember vividly, we had our key level situated around the $85 area, and for the first 12 to 15 hours of the week, we saw how price action was oscillating right around our key level to emphasize the level of indecision in the market at that point in time. And of course, we were able to identify a range bound structure where price was confined within the $85.25 level. Then initially it was the $85.13 level support line before it expanded into the $84 area, giving us a beautiful range bound structure to work with. And you know how we use our range bound structure. Whenever we identify them on our chart, we exercise patience, waiting for price action to either break down the support line of the range to give us an opportunity to sell, or the breakout of the resistance line for an opportunity to buy. And considering the fact that price action was within an uptrend scenario identified on the higher time frame, we were looking forward to break out of the resistance and the key level of that range to give us an opportunity to buy. Though we bought, we saw price moved about. How many pips was that? About 55 pips thereabout. We got taken out at break even on that first one. Then we saw price action came back again, triggered the buy position, and we saw how price stayed most of the time Tuesdays and Wednesday below our key level to incite a bearish move that took us out of that buy position in a loss. And of course, remember that we talked about this on Wednesday, that if price action goes ahead to break down and retest both the support line of that range and the $84 area, we will be in to join a bearish move to the downside. And since Wednesday's trading session, we have been selling the US All Spot. As you will see here, price action did move significantly well in our favor, as we saw price move over 300 pips on the first sell position, and of course moved over how many pips was that on the second position? About 55-60 pips on the second position. And I can remember telling us on yesterday morning that we should be moving all stop losses accordingly to secure the current sell position. And if you had done that, you must have been taking out with a minimum of about 200 pips in profit on the US All Spot. And for those of us who are part of this profitable journey, well done and kudos to you. Now, moving on, opening up the chart this morning, I saw this significant impulsive move moving to test that key level at the $85 area, as you will see here. What a very strong impulsive move that is. Now, the question is why and how did this come into play? Because it was an unexpected move at this juncture. Well, as we all know, the recent we learned this morning that the Israelis attacked the Iranian territory over the night, and though I'm yet to get a detailed news into that, because I was just looking at the headlines this morning as it was scrolling through my screen. So we saw there was reports that Israeli missiles striking sites in Iran, and this development has resulted into some panic in the market, which sent ripples across the market as regard uncertainty of the situation. And we all know how influential the Iranian government is as regards to production of oil in the global market, and Iran produces about 3 million barrels per day. And if this continues, there are chances that we might be seeing disruption in oil supply from this particular area, which will obviously influence the demand for oil and of course result into oil spiraling up to the upside. Now, with the situation we have here, and considering the recent development as regards to the federal interest rate decision, as we all saw hawkish remarks from Federal Reserve officials during the course of the week, where they have emphasized that inflation is still very sticky and that interest rate may be kept higher for an extended period of time. And this has elevated the US Treasury bond yield, which in turn will influence positively the US dollar, making the US All Spot, which is a US dollar denominated asset, to lack demand due to the high cost of buying US oil, because when the dollar rises, the value of the dollar will affect the purchase of the dollar, as those who are buying the dollar using other currencies will find the dollar very expensive, and this may affect the demand for oil, and this could exert downward pressure on oil prices. So we are caught within a dynamic right now where we have potential for price to drop to the downside, and of course the Iranian-Israeli latest development that could make price skyrocket. Now, within this whole dynamic, how do we intend to position ourselves for the next move? Well, the answer lies on the chart, where we shall be seeing how market participants have reacted to this latest development. Now, if we look at the 1 hour time frame, which we identified, which we are using as our execution time frame here, remember on Wednesday we had this beautiful descending trend line, which we said we will be using to support that bearish momentum to the downside, and as long as price remains below that descending trend line, we shall be looking out for patterns and structures that support the idea of selling the asset. Now, what happened this morning? The breakout of that descending trend line is technically considered to be a bullish signal, where price coming back to retest the structure is all we are going to be needing to continue the uptrend move. And as a result of this, I was able to identify a potential buy window between the $83.25 level and the $82 area after using my Fibonacci retracement tool. So if we take the whole length of the previous impulse leg here and run our Fibonacci retracement tool all the way to testing that area around the $85.50 level, you will see that we have our golden zone area, which is between the 50 and the 78.6%, fall within that $83.25 and the $82 area, where depending on how market participants react to the structure would determine what our next line of action will be. Now, in addition to the buy window we have identified here, we have an ascending trend line which captures the series of higher lows in the last 24 hours, and you can see how beautifully the trend lines, in fact the descending trend line, the ascending trend line, all share a confluence within this potential buy window. Now, depending on how price reacts to this confluence will now determine what we are going to be doing. Now, for us to buy the US All Spot, I would like to see a reversal pattern evolve around this area. It could result into a double bottom structure, head and shoulder pattern, whichever case it may be. We mark out the neckline of that reversal pattern and of course buy the breakout retest of that neckline to join an uptrend move to the upside. So that is how we are going to be joining any bullish move on the US All Spot today, and this may likely take about 2, 3, 4, 5 hours before the pattern finally forms. So we need to exercise patience around this area, waiting for significant setup before jumping into any positions. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as and when due. However, if the market reacts in contrary to these technical expectations, that is after digesting the implication of the Israeli attack on the Iranian soil, and that will be subject to how the Iranian government will respond, and this will depend on what the Iranian leader, the Iranian military will be saying this morning, which we're still yet to get because it's still morning in Iran right now. So we're looking forward to see what they will be saying, and this will determine how the market will react. So if it so happens that the market goes in contrary with the technical setup, then we will be looking out for selling opportunities below the $82 area. That is the breakdown of both the ascending trend line and the $82 area will welcome selling opportunities, as if price can break down the $82 area, we are going to be within the seller's territory. As you will see here, price will be back below that descending trend line we identified during the course of the week, giving us a sign that price is within seller's territory, and continued selling pressure within this area will be all we need to jump into a sell position here. But I doubt if that will happen today due to the geopolitical tensions in the Middle East. But if it does happen, we want to be on standby to capitalize on that move. So this is my simple setup here for today. You can see how crucial this area within the $83.25 level and the $82 area is going to be playing a significant role in guiding our trading decisions for today. So I encourage us all to mark out these levels accordingly on our chart, as we will be using it to guide our trading decisions for today. If you have any questions whatsoever as regards to my illustration, or you need some further clarification at any point in time, feel free to drop them in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever, while you also use that time to mark out these levels accordingly on your chart. So I will see you on the other side after taking about 10 to 15 seconds off before we move on to the next asset on our watch list. So stay tuned in, guys. All right. So I can see um I see your comment, C40. Thank you very much for the support. I really appreciate that. And I also saw that we only have one like, so when we have over 5 people on board, please, if you have found this content helpful and useful in making your trading decisions, in independent trading decisions, kindly give the video a thumbs up. Your likes are very valuable to me, and of course it also helps in pushing this video to a wider audience of traders who may find the content beneficial, which in turn will help the community to grow. And thank you very much as you do so. So let's make the likes tally with the number of people on board, and thank you very much as you do so. So in the absence of no questions for so far, we shall be moving on to the next asset on our watch list. Stay tuned in, guys. So the next asset we are going to be looking at this morning is going to be the GBPUSD, and it has been quite a challenging week for us, especially on the GBPUSD pair. As we can see, the market continues to exhibit indecisive behavioral pattern marked by an extended sideways trading activities since the beginning of the week, and this has further emphasized the prevailing uncertainty in this particular market due to what we are seeing here. And of course, due to this development, we had a couple of losses on the GBPUSD, as every buy positions we took keep snapping back into entry point. Initially we were looking at break even, then later on we had our stop losses hit, and price continues to struggle within this range bound structure. Now, if you remember, at the beginning of the week we initially had a smaller range bound structure where price was in confined within the 1.24650 level and the 1.24410 area, as you will see here. Now, range bound structure usually gives us an insight into the prevailing uncertainty in the market, and whenever we spot this kind of range bound structure, we want to exercise patience, waiting for market participants to make a decision of where they intend to go. And this usually reflects on the chart as price action breaking down the support line of that range to trigger a bearish signal, or break out of the resistance line to trigger a buy signal. And of course, we had the privilege of joining the first buy position for the week as we rode it all the way up, giving us about 35 pips in profit before sellers came in, taking us out of that position with some small profit, or worst case scenario, break even if you had moved your stop losses to break even area. Now, during the later part of the week, we saw that same level got triggered, and I think we had a couple of stop losses in that regard, taking us out of that positions. Now, during our Wednesday's live session, I did emphasize that the way the structure is on this chart is making it seem as if that the pound sterling has a glimmer of hope to rise to the upside. Now, if we take a closer look at the structure since the week has began, the week began around the 1.244100 area, and if you look at below the support line area, you will see that sellers have struggled to continue the momentum to the downside. And as you will see, since the beginning of the week, every attempt by the sellers to break through this area has been met with strong resistance from the buyers. And in fact, if you go ahead to look at the character of the week of those candles, you will see sharp rejections at every point in time, and in fact you will see engulfing bullish candle too as well, springing in from this particular zone. And not until yesterday we saw strong bearish impulsive move, but as soon as price tested the 1.2400 area, we saw engulfing bullish candle spring out from that area again, leading to a situation where price action has broken out of that descending trend line we spotted at the beginning of the week. Now that reminds me, for those of us who missed out on our top-down analysis on the GBPUSD at the beginning of the week, please, you can look at my video on Monday on the GBPUSD, where we were able to identify those trend lines and key levels that guided our decisions for the week. The links are right in the description box of this current video. So going back into structure, due to this sharp rejection between the 1.24410 area and the 1.24 area, I had a strong feeling that price will continue to the upside, and we might be seeing a reversal setup that could be the beginning of the retracement of that bearish impulse leg that came in following the CPI data that came in last week. So I was looking at a possibility of price action reversing back into that potential sell window between the 1.265 and the 1.257 area before we can start considering selling. However, this is yet to happen, but we are still within that demand zone area, which still supports a bullish idea here. Now remember what we said on Wednesday, that the only condition that will make us sell within this area is for the 1.24 area to be broken and retested before jumping into a sell position. Though we had a little breakdown of that structure, but there was no signs that sellers are getting stronger around that area, so we never thought of selling the GBPUSD. So again, I already have a buy position triggered again. I just hope that price action will continue to the upside, so we'll keep on trying and trying until we finally be part of that move to the particular direction that market is going. So that is one thing about trading. It could be a little bit tough sometimes, especially when market fail to make a decision during the course of the week. So this kind of week, this week now on the GBPUSD, we are really not profitable at all on this asset. So we are going to be banking on the potential volatility that comes with last trading day activities, where market participants will be rounding off ahead of the weekend. So let's see if the bullish momentum will finally come today, and see if we can recoup the loss we incurred during the course of the week on the GBPUSD. So I have multiple levels here that I will be using to maximize the uptrend continuation. So I have the 1.24650 level, the 1.24875, that is the highest point for this week, and of course my key level had the 1.25350, all of which have orders in preparation for an uptrend continuation. So that is what we will be looking out for buying the GBPUSD today. So let's see how the market is going to play out going forward. However, if the contrary happens and sellers continue to maintain their bearish signal, remember that the recent fundamental is supporting a stronger US dollar. Remember, I talked about the market sentiment shifting driven by recent geopolitical tensions, and of course the sentiment as regards to the federal interest rate decision, where a majority are now leaning towards a higher interest rate for an extended period of time due to the resilient US economy, and of course the sticky inflation in the United States. And this development has in fact significantly favored the US Treasury bond yield in the last 48 hours. If you look at your US Treasury bond yield chart, you will see that the traction is gaining on that one, and you know how the US Treasury bond yield is directly proportional in value to the United States dollar. So If this case becomes a say for today, that is the dollar gains momentum, then we might be seeing a bearish traction, which could lead to the breakdown of the 1.240 area, which is the support line for this week, to incite a sell-off to the downside. So we're not going to be considering selling unless the 1.2400 level is broken to the downside, and in fact at that point price action will be trading below our descending trend line. So this is my simple view on the GBP USD for this week. So let's see how the market is going to play out going forward. So that is my simple view on the GBP USD, and trust me, I will always be with you in the comment section of both my trading view and Telegram platforms to give you updates as at when due. If you have any questions, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the final asset on our watch list for today. Stay tuned in, guys, and use that time as well to mark out these levels accordingly on your chart. All right. So in the absence of no questions, I want to assume that we are all on the same page here. So in that regard, let's move right into the final asset on our watch list for today. Stay tuned in. So the final asset we are going to be looking at today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. Well, this asset we are talking about here always gain tractions, especially during eras of geopolitical tensions, as majority of major key players in the market will tend to move their funds their capital from currency assets to non-yielding assets such as gold. And of course, this has been the case since the beginning of the year. The last 2 months thereabout, price action had continued to find new highs. And just yesterday we had the Atlanta Fed President Raphael Bostic highlighted that US inflation is still excessively high and emphasized that the Federal Reserve still needs to make progress on addressing inflation. The same thing was also the remark from the New York Fed Chair President John Williams, who also emphasizes commitment to being data dependent and expressed that he does not currently have any immediate need to lower interest rate, and if data says otherwise, then the Federal Reserve may likely consider this. Then during the course of the week as well, we also had the Federal Reserve Chairman also emphasize this rhetoric as regards to the inflationary pressure in the United States. And for me, the path of least resistance for the US dollar is looking bullish. However, in the XAUUSD market, we've not seen this reflect on this chart at all, and we all understand why this is happening. The gold market, the gold commodity, is considered to be a non-interest yielding asset and is always considered to be an inflationary hedge commodity. Is what major key players use to hedge against inflation in the market, and this usually results in higher demand for gold commodity, which would result into, our simple economics. When demand increases, there is scarcity for this asset, and when there is scarcity, price of this asset will rise. And I also mentioned in the last couple of weeks that we learned that the Chinese, the Kazakhstan, the Indian, most of the Euro-Asian countries have been buying this asset in the last 3 months, and this has further assisted the prices of gold to find new highs. And in fact, we are within uncharted territory. We are within all-time high zones, and at this point we need to be very, very careful in the decisions we make. Now, at the beginning of the week, we had interesting trading setups which we actually used to guide our trading decision. Now, let me quickly take you on a refresh of what we talked about at the beginning of the week. Now, you remember that we had our key level situated around the $2,335 area, and if you look at this level closely, you will see how this level had played a significant role in negating all attempt by the sellers to break through since the second week of this month. Now, every attempt by sellers to break through this area has been met with strong resistance from the buyers, and for me, this served as a strong demand zone. And as long as price action remains above our demand zone, we have no business selling this asset. And this was the narrative that guided our trading decisions for the week. And look at what happened at the beginning of the week right here. Sharp rejection keep on happening, showing us signs that sellers are finding it difficult to settle below or around this area. Now, in addition to this observation, we had a range bound structure at the beginning of the week. As you will see here, price action confined within the 2,360 and the $2,346.50 level. And if you are with us during our live session on Monday, we identified this level after identifying a simple bullish setup on the 15 minutes time frame, where we were looking at capitalizing on buying opportunities at the break of the $2,353 area. And luckily enough for us, at the beginning of the week, we had the privilege of maximizing the potential bullish move by adding more positions at the breakout of the 2,361. We also added one more at the breakout of the $2,372 area, giving us about 3 buy positions at the beginning of the week. And by the time we moved, our stop losses and bearish momentum came in, we were taking out with a minimum of 300 pips in profit on the XAUUSD. And the bullish traction continues to maintain its outlook throughout the course of the week. Remember, on Tuesday we said we were going to be joining another wave of bullish momentum at the break of the $2,372 area, after we did say that we will wait and see how far will this bearish momentum go, and that depending on how price reacts to the trend line will guide our decision. And look at what we had here, something like a double bottom structure, and we had the privilege of joining again, adding about 2 buy positions again, giving us about 100 pips thereabouts on that second position too as well. Then later on Wednesday, we were around here during our Wednesday's live session, remember, and one of the key parameters we said that we are going to be using to guide our decision for the remainder part of the week is this ascending trend line we projected here. And you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we shall continue to look out for patterns and structures that support the idea of buying that asset. Now, with this in mind, we joined another bullish move on Wednesday, which did not do very well, as we bought at the breakout of the 2,388, and then we got stopped out as price action dropped, break down that ascending trend line to hit our stop loss on that one. So we recorded our first loss on Wednesday, but with this all, we're still within the positive territory on our portfolio. Now, in the last 36 hours here, if you saw my commentary during on my TradingView and Telegram platform yesterday morning, I did mention here that we are going to be buying only at the breakout of the 2,388. As you will see, price action was confined within this range for about 12 hours thereabout, and that we are only going to be selling at the breakdown of the 2,372. So throughout yesterday, we had no trade on the XAUUSD, but with buy stop orders placed at the breakout of the 2,388, and of course sell stop orders placed at below the 2,372. During the Asian session, I woke up this morning to see that my buy positions was triggered, but unfortunately for me, I was fast asleep when this whole thing happened, so I wasn't on standby to manage my buy bullish position. So we saw price action drop back into our entry area. And for those of you who are awake and during that time and you were able to manage these positions, well done to you, as we saw price move about 300 pips following the Israeli attack on the Iranian territory, which escalated the price of gold to the upside. Now price has dropped back into the structure again, and I had to project this ascending trend line, and here we are. We have a new ascending trend line that will be guiding our trading decisions for today. In fact, I encourage us all to mark out this trend line accordingly on our chart, as we will be needing it as a reference point to guide our trading decisions for today. And you know how we use our ascending trend lines. As long as price remains above them, we have no business selling this particular asset. So as it is right now, following the impulsive move to the upside, we've seen price do a retracement move back, which for me is as a result of profit taking activity, as majority who are taking advantage of that move may be wary that price may crash from this particular area. And secondly, we may be seeing a situation where market participants are trying to digest the implication of the Israeli attack on the Iranian soil, and whatever the Iranian representative will be saying this morning going into later in the day will determine what is going to be happening in this market. So at this point, I think the market participant will be trading on cautious territory at this point, waiting for the latest development to guide their trading decision. So we may likely be seeing some extended sideways trading activities around this area between the 2,388 and 2,375 level before a final decision is made, either to the upside or probably to the downside, depending on how the market digest and react to the latest development. So at this point on the XAUUSD, we are at a crucial juncture in the market where, depending on what happens here, will determine what our next line of action will be. So as a result of this, the levels we've been using since the beginning of the week still remains valid, and for those who actually missed out on this bullish move, we still have the hope of joining an uptrend continuation at the breakout of the $2,388 level, and then looking to add more buy positions at the breakout of the 2,398 and of course the 2,427 level. However, if the market reacts in contrary to technical expectations, leading to the breakdown of that ascending trend line, then we'll have no other choice than to look out for selling opportunities below the $2,372 area to incite a sell-off to the downside. So this is what we shall be looking at to guide our decisions for today. So I encourage us all to mark out these levels accordingly. Let's see if the geopolitical tensions will hold sway, or the recent hawkish remark by the Federal Reserve will be the determinant factor that will guide market participants' decisions today. And of course, we have levels identified on the chart that we are going to be using to capitalize on whatever opportunity the market presents. So I encourage us all to mark out those levels accordingly on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So this is my simple view on the XAUUSD. If you have found this content helpful and useful in making your independent trading decisions for today, I really appreciate your support by giving the video a thumbs up. I can see as at last time I checked is about 1 like so far, and we had over 8 people that came on board today. Please, I really appreciate your support. Give the video a thumbs up. It doesn't cost you anything, and thank you very much as you do so. So let's see if we have any questions whatsoever before we start rounding off on today's Forex Morning Mastery. See you on the other side. All right, guys, thank you very much for the support. I really appreciate every single one of you. You guys are wonderful, and though the week hasn't been rosy for us in this community, but I'm of the opinion that let's give a last attempt to see if we can recoup the loss we incurred during the course of the week. And I also want to emphasize the importance of risk management strategy. Please, it's very important that we have well-defined risk management strategy in place while we are trying to navigate the uncertainty of the financial market. Remember, every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with that in mind, please, let's ensure we have a well-defined risk management strategy in place, so that when we lose money, whatever we lose will not affect us emotionally and judge our subsequent decision. This is very important. So please, let's take that in mind while we employ a well-defined risk management strategy. So I see your comment, C40. I know the market can go both ways. However, based on your experience, what is your personal bias? Well, over the years in my in my trading, over the years in my trading, I've come to realize that there is no personal bias in the financial market. That is my own perspective. There is no personal bias. In fact, the major key players in the markets do not even know where price is likely going, so they rely on informations like inner cycle gist that could probably sensitive information that could influence the sentiment in the market, and of course build up on that. And as technical traders, what we are looking for in charts is structures and patterns which reflects the footstep of major key players as they build up their moves ahead of a strong impulsive move to either way. So due to this, I usually have myself prepared for any opportunity that comes in. As a result, mark out levels and structures that I will be using to guide both ways. So personally, I won't say I have a personal bias at all. All I will just do is exercise patience and wait for the structures to mature before jumping into any position. And for instance, on the XAUUSD, like I have here, if price still remains above the ascending trend line, we shall continue to look out for patterns and structures to buy. Hence, we have the 2,388 area as a yardstick to guide buying opportunities. And if price breaks down the descending trend line and the stance of interest rate being kept higher for an extended period of time comes to drive the sentiment in the market, then a breakdown of the ascending trend line will incite selling opportunities below the $2,372 area. So that is how I navigate the market. I try as much as possible not to get my emotions involved in the market. So what I'm trying to say is I do not get attached to what the preference will be like. So I'm just open to whatever the market presents to me. I hope I clarified that there. C40. So I think on this note, in the absence of no further questions, we have come to the end of today's Forex Morning Mastery. Though the week hasn't been a very rosy one, let's take a final attempt to see if we can capitalize on any interesting opportunities today. As we all know, last trading days usually come with rounding off trading activities, which may give reversal setup, as price may likely be going in the opposite direction of prior leading price action, and this brings some volatility which we can capitalize on. So on all the assets we are monitoring for this week, that is the USOILSPOT, the GBPUSD, and of course the XAUUSD, we have been able to identify simple trading setups that we are going to be using to guide our decisions for today. And I do hope we marked out our levels accordingly on our chart. If you have done that, well done. Kudos to you guys. So let's exercise patience at this juncture and let's wait for the structures to mature. For those of you who are joining us for the first time, you're highly welcome on board, and I'm very, very excited to have you around with us this morning. And if you have found this content helpful, I hope you are click on the like button, and if you have found it helpful, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand our analytical approach, which will eventually help you in fine-tuning your skills in technical analysis. So I look forward to seeing you same time on Monday, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to start the week on a positive note. And if you are yet to subscribe to the channel, I encourage you to do so right away, as I will be dropping some insightful content as regards to my preparation for next week's trading activity, which will be dropped during the course of the weekend. So if you are yet to subscribe, please do so that you can get notified as soon as I drop content as regards to next week's trading activity. So it's on this note, I would like to wish us all the best of luck today. So I look forward to seeing you all during the XAUUSD live window. You will be seeing the link immediately at the end of this video. Click on the link, click on the notify me button so you can get notified as soon as we come on live. So the XAUUSD live window is a platform where we come together to monitor real-time price action on the XAUUSD. So it starts about 5 to 10 minutes into the New York session and lasts for about 5 to 7 hours, depending on the volume of trading activity for that particular day. So I look forward to seeing you right in that session. So I see you are very much welcome, C40. So I wish us all the best of luck. I wish you a wonderful weekend too as well. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.